Good evening, all. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for the last day of November. It's the 30th, 2022. Wow. You know, I think most of us thought the Fed Chair Powell was going to say pretty much what he said. I think the market was anticipating that he was ready to back off from 75 basis points to 50. I think the market thought that he was going to say that he's going to stay data dependent. They don't know how high they have to go up on interest rates, but they haven't won the battle. He was going to say once the JOLTS data report came out this morning, when you saw how many ads are running per job available, that the labor market's just staying still strong, surprisingly so, and it just doesn't seem to want to back off. So those were the things that were said. Did you expect the market to run like mad? Because I think the market got part of this wrong. What the Fed said, the Fed chair, is that yes, we've done 475 basis points, went from practically zero to where we're at right now, and that maybe with the lag effect, you can back off a little bit and maybe go to 50 basis points. Well, if you go to the FME, at the CME's FedWatch page, you've been seeing that's the strong probability. But nobody's listening. He didn't say he was stopping. He didn't give you an indication as to when the Fed is going to stop raising rates. He didn't give you an indication that he knows the number that they'll stop raising rate, not the amount each month, be it 50, 25, or 75 basis points. He doesn't know if it's going to cap out at 5, 5.5, 6. There's no way to know. It's data dependent. The market was looking for reasons to make moves. For my full research people, I wrote today how traders were making wild, bets, $36 million bet, other bets of, I was calculating it, 20 million on option strategies as he was talking that were going up to around the 4,150 to 4,200 level in the S&P. Monster bets. So this is what people are doing. They're looking at the combination that if they can get through the jobs report, the PCE tomorrow. Now the PCE report tomorrow, the consumption report that we get is going to do what? That report, as you know, is going to be looking at past data. What do I mean by that? It's September data. So it's not going to give you quite the readings that you would think the way you get out of other data that's only from last month. But it's going to be important. And the Fed, it's one of the Fed's favorite tools. What you will be looking at hard is the jobs report. Now, what do we have coming up for us? These are the reports tomorrow. Challenger Gray. Then you get the Dallas Fed president. Then you get jobless claims, personal income consumption. That's what a PCE is going to be. Then you get Fed Board Governor Bowman. Then you get the S&P Global Group PMI for November coming out. ISM Supply Management for November coming out. Construction spending tomorrow coming out. And then we'll get it later about 9:30, the natural gas storage. Whoa. This is an awful lot to digest in that first up to 9:30, actually 9 o'clock in the morning is where it all is going to come in. Please be careful. This is an awful lot. And then Friday morning, you get the other piece of data, the monster, the jobs report. That's going to move the market also one way or the other. So this 72-hour period that began today through tomorrow morning, then I think you can trade. Then you got to be careful for the jobs report. And then we get clear sailing till we get to next week's CPI. Whoa, that's an awful lot you got to deal with. In between, then you have one more thing you have to deal with. My Cyber Week special runs out. Now I'm going to be raising, and I was going to do it at the beginning of the year. I decided when I was doing my financial video why. So I'm going to raise this week the price of my original charting course, my Bollinger Band course. If you were thinking of taking it, this is the way to get it for free. And my new outside day course is just about done. I should have it done this week that we're in. Then they'll compile it next week and have it out next week. That's the goal that we have. Could something change it? It could, but I doubt it. But I'm looking at the price of my courses, and I went online to see what other people are charging and the quality of theirs. Mine's better. And it's so much cheaper. I'm looking at, I'm 1/5 the price of some of these things out there. I'm not going to go up that crazy, but I'm going up. So during Cyber Week, you buy any 1-year subscription to my research. We have a way that you do it if you're already a paid subscriber. There's ways for you to upgrade yours, but that's the theory. You choose from any one of these. You can give it away as a gift, by the way, either subscription, keep the course, keep the subscription, give a course away, or use it all yourself. We'll work with you when you want to turn on those courses. It's not the day you buy it. We work with you on all that. So last time you're going to get something this good, and I promise you, if you're thinking of buying the enhanced Bollinger Band course or anything, do it now. I'll probably go up a minimum 33% on it. So that's what we're going to be doing, okay? You got your thing. To get it, just move your cursor at any point to the top of the video and go with it. I've done my job, and I've given you your Christmas gift. You decide what to do with that. Okay, so let's start with what we were doing. We've been talking for a bit here with Peabody Energy. You can see it's still moving to the upside. Higher lows, higher highs, still looking to me pretty darn good. So where's the resistance and support? Well, all the support numbers are below the market. This is your 200-day moving average. That's your 100, your 18. It's a classic bullish setup. The shortest moving average, the 18, is over the 100. The 100's over the 200. Bullish. What about resistance? Well, there's several. One of them I show here, the other are window envelopes, and those are for the paid subscribers. They're every morning when I do my different charts. But for this one to be the window envelope, lo and behold, you hit it again today. In the past, each time you've gotten up to these numbers, the market within a short order has given you a correction. You do what you want with it, but I know if you were my client, what I'd be telling you. And you're not embedded. Lithium didn't want to make it to the lower Bollinger Band. So where did it go? I call a number on a chart the line in the sand. It's the 18-day average of closes. I call it that because to close over it, you have a bullish bias. Under it, you have a bearish. And where markets often go to fight the battle is that number. You learn that in the charting course that I have. And it stares you in the face all the time. So you stepped out of your downtrend. That's the very first thing to see on this chart. You had a downtrend of lower highs, lower lows. You were oversold. Hoping it would get down there was nice, but it already hit window envelopes. I promise you, because I look at it on the other charts for the subscribers. And now I'm looking at the market. Could it get back up, or is it going to hit the Bollinger Band? What it decided to do is it jumped with everything. And away you go. You're out of the downtrend. You're not in an uptrend. You're out of the downtrend. Apple. I was telling people this morning that I'm still in the bear camp, okay? And I certainly look like there's egg on my face, because here's what you did. The market came down. The question was, were we going to go back to the Bollinger Band? As of this morning, it certainly looked that way. A couple of things happened today. Number one, obviously, the market as a whole took off after the Fed speech at 12:30, but China made a statement. And, you know, that's why I come in and I write my full research, and you get a lot of things you don't see other places. I'm scanning all day long for different things. And the head of their health system, similar to our Dr. Fauci, has come out and said that the strain in China is not as virulent as they had feared. And yes, while it's spreading, it's not causing all the deaths and all. Code word, let's relax a little bit. So, Guangzhou, I think I'm saying that right. They immediately released some things. You'll see, these are the code words. The real code word is they had revolution in the streets. These are not stupid people. These are smart government people. They see what's going on. Maybe they've gone too far, and they've got to do something for the good of the country as well and back off. But you never say that. You come out with ways in order in the Asian culture, and frankly in politics galore. Oh, it's not as bad as we thought. We can handle this a different way. Well, that's going to help a company like Apple, don't you think? Because maybe they can get workers back to making their phones. I get it. You didn't change the trend, but I understand why it bounced. Disney, well, the market's going to be looking at Avatar, the biggest movie. I think it's probably going to be the most expensive movie ever made. Now, Bob Iger did not do this. And now we're going to find out, does this make sense? Is it going to be the blockbuster that people think? I, for one, am going to go see it. I love the first one. I want to see it in 3D. I want the screen all around me. Who doesn't? I mean, it was quite an experience. So I get it. This market's probably getting ready for that Christmas boom. In XLF, all you did is pull back to support at the 18-day average and kept the bullish embedded reading. No, the financial service is still looking okay. If it can get legs under it, maybe you get to the Bollinger Band. But I can tell you, the number you don't want to see broken now, it'll hurt this market, is today's low. It's an outside day up. You haven't taken the outside day course, but you don't want to see that to happen. I'm not going to say another word. XLI, outside day to the upside too. This fits so in with my course now. And I teach you how to take advantage of this in it, because these patterns, outside days up or down, occur regularly on charts. But I've looked all around for courses that explain it in a way to me that makes sense. I haven't found it. I did it, and I'm just in the last. I have one more chapter as an example, and then the wrap up. So I've got 2 chapters left. Each chapter 7 or 8 minutes, okay? It takes me to do them longer than that because I want to make sure that I'm doing them right. And then rendering, I'll be done. In the semiconductor, you went back to the 18-day average, outside day up again, just showing you what's going on. Today caught the market off guard. Why, I don't know. I wrote a detailed report about it, and it just amazes me. But that's why I don't go through these things. I walk away when I know the Fed chair is coming on, and we've seen Mr. Bullard and everybody else giving their opinion very strong. He didn't go with Bullard. He broke away from him. He wants to be more moderate, he being Fed Chair Powell. Can he be? Because he needs the data in order to do it. Now, more moderate is still a 50 basis point hike, most likely in December. And then after that, 50s or 25s is my guess. That's all off the table if everything becomes sticky in inflation. He's waiting for the lag effect, but at some point he'll say, I'm not getting that effect. We got to goose the number up again. So remember how this is working. XHB, all you did is come down to the 18-day average. Now, you did get back over the 200-day average. Market likes the fact of what in the home builders? Let me think about it. Let me think. Maybe, I forgot. Mortgage rates. Break mortgage rates, people want their homes. You know, I don't care if prices fall. They're not going to fall that much. You have a short supply of homes. Homes are going to hold up. Yeah, they got overdone. Yeah, rents got overdone. The pandemic drove rents up. People couldn't buy homes because of high mortgage rates. They drove it up. They'll abate. They always do. The game changes all the time. And rents that went crazy, be it New York, Chicago, different spots, they will fall back. But they're not going back to where they used to be. Why? Because you don't have the supply of homes. They're expensive. And you still got relatively 6.5% 30-year mortgage rate. That's why. In the gold market, as long as the dollar stays weak, what have I been saying here over and over? This is gold's friend, and you can see that on the chart. Silver. Do I ever tell a client to buy over a Bollinger Band? Slap me across the face if I do. No, I won't do that. Same thing in copper. I'm probably the biggest bull you'll know in copper. But this is where you're stepping out of the market if you're in it. In my opinion, you hit the Bollinger Band. Now, we get to these numbers that are vulnerable. TLT, BND, EFA, keep your eye on all of them. They've got to get through a whole slew of things right now. They've got to get through tomorrow's PCE. It's not going to be a major report. It's from September, so I don't worry about that. I worry a lot about the jobs data and the upcoming CPI numbers. Those will get my attention. But what do we have here? We have embedded readings. It's not the chart pattern that you're trading. You're trading the momentum. If the red line closes under 79, you got to be out. As long as it's there, the pros are buying on the breaks, looking for the higher price, in my opinion. In UUP, if we step back together here, Yesterday, the market flirted. Good looking. Hi, how are you? Flirted with the market doing what? Flirted with it losing the embedded reading, but by day's end today, what happened? You kept it. Now, if it loses it over the next day or two, then you're probably going back up there. But right now, today was a head fake, a big head fake. And in FXE, same thing. But you did yesterday. Let's get to this. There you are. Let me get to it. This is Tuesday. You had lost the embedded reading. When can you get it back? Only the day afterwards. Did it get it back? Oh, yeah. So now the pros will buy it again as long as you don't get the reading under 80. And if you take my outside day course, you get another edge because I explain how this all works together and how you put A and B side by side. So I'm going to repeat it one more time. We're coming to the end of our Cyber Week sale. I'd love for you to take advantage. The course prices are going to go up on you. The new one coming out is going to be at the new price, not the old prices I was going to do up until today. And now they're coming out higher. All you do is take your cursor up to the very top, give it a click, and away you go. I'm Ira Epstein. Have a great day.